I think I know we've talked about before, but the number one rule here is to consistently make money, right? That means over 100 trades, not today, not a week, over 100 trades, over our a month, a year. We want to make more money than we lose. So to do that, we must approach the market in a super consistent fashion. Like our behaviors must be consistent, right? So a perfect example is Friday, right? So Friday, I want to break down the reason why I was bullish, but at the end of the day, we're going. I reached a point in my trading career where I started to hesitate on my trades because I was so worried about being right, and I was like, I would see great trades, I wouldn't take them for whatever reason. You could always talk yourself out of a good trade. You know what I mean? Like, so I reached a point in my trading career where I'm like, okay, I identified this gap here from 453.56 all the way up to 455.50, right? So if we could hold previous day high, I was looking to play longs targeting the upside, right? And obviously I should have waited until we like really accepted this supply right here. But once again, our job as traders is not to be right. It's to identify our edge and act and control our losers. So that was my whole methodology going into that long. And it was a very quick decision. We don't got the 2-minute on trading view, but we'll whip out the 3-minute. So when the candle closed above, on the 2-minute candle, it was actually green. We closed above it. And I was like, you know what? We closed above previous day high. I'm willing to buy into this trade, just like poker, right? I'm willing to throw some money on the table here. And if we hold, I'm going to go long, right? Targeting a $3 move, risking 20, 30 cents. You know what I mean? I'm like, whatever. So trade goes against me. We then get stopped out, right? And that's why that hard stop is so critical for me, right? And I think you use one too, Todd, where it just gets you out, right?
That's automatically. I don't touch it.
No.
If it knocks me out, I'm on to the next.
Exactly. And I actually adopted that from you, and it's been so good to me because, our job as traders, right, is to identify an opportunity and to protect ourselves from that vulnerability of, because the way these sell off, because it's hitting everyone's stop loss. If you're going for a mental stop on a trade like this, and within 2 minutes, if you even like 30 seconds, this thing's gonna tank $1.50, and that's gonna hurt. Like, that's literally gonna be 50-60% of your position gone, vanished, and now you're in the hold and hope mode, right? And if you're in that hold and hope mode, you're not going to see this beautiful setup we got. You know what I mean? I've done it so many times where I'm in a position and I'm down 50% because I didn't have my hard stop in. And now price is starting to come back up. And now I'm only looking at green candles. I'm super bullet. I'm like, oh yeah, buyers are going to defend this. And then what's the market do? Exactly what we want it to, like, so stopping out of that position so fast. And now the important thing here though is the position size, right? So I enter every trade with 10 contracts and then I'll look to add. So I'm out of this trade for about a $200 loss. Boom, on to the next. Not even actually, I think it was like 17%. Boom, out, on to the next. And then as price came back up into this area, I actually took 2 losing trades, right? Let's walk through it. So we sold off, and then I got antsy, right? And I was like, okay, here's a gap down to end of day. I want this, right? So I enter the trade short. Once again, you can't see the entry candle I took because I'm on the 3-minute, but I failed to wait for the retest, right? I end up entering on this candle to the downside. Price sells off about $1. So I'm up around 60, 70% on this trade. And then buyers step in, boom, knock me out of it, right? But my entry and stop was so on point here where I didn't even lose money on this trade.
Break even?
Yeah, I literally broke even. I think I lost about $6, right? So because, I buy my contracts for 100, I'm putting my stop in at literally 100 because I know if price goes above this, I'm not willing to risk this. This right here was like 80 cents. And with time decay, I didn't want to risk that, right? So I'm like, okay, price comes up, stomps me out on this candle, boom, break even. Once again, though, my ability to already rip that Band-Aid off is keeping my mind in the correct mentality. That's the most important part here. Like, obviously, you don't want to leave yourself vulnerable to losing, but being able to look at this and go, hey, I got my eye on this same critical level. I want to trade with whoever defends it. Sellers defended it here. If sellers could pop back up here, and I've been using this open print religiously lately, and it's been helping me so much. Like whoever defends the open later in the day, it usually is a super slam dunk trade. So price rips right into it, and we get that break of structure right there. Which, let me whip out the 1 minute because you can see it really good on the 1 minute. And that's that pattern we're always looking for. Is that lower high break of structure. Oh man, this trade was beautiful. So
that's the money making.
This is
right there.
So, and this is what I want to get with the importance of position sizing. So just like poker, I'm now entering this trade with 10 contracts. I'm getting in. I think I ended up getting in on this candle, right? I should have waited for this break right here of structure, but once again, I'm at a point in my trading career where I'm like, I got a lot of, I'm to the point where I'm like, okay, if we get any rejection in this area, I want a great entry. I'm going to put my stop above like this candle. So once again, I'm risking like 20 cents on this trade, enter short, and then price starts to break. I love this candle right here because this little green candle, let me see if I can zoom in on there. This little, I don't know, a hammer or doji, whatever it is, this is starting to show the weakness, right? We got our support. We break it. We close below it. This is probably the entry candle. Price comes up, rejects it. And then price action started playing with my heart on this candle. I'm not going to lie. Because this candle was red. And this was already going my way very quickly. And then boom, buyers show up. But once again, I've accepted the risk entirely. You know what I mean? At this point, I'm like, hey, I am short. I'm willing to put 10 contracts on the table here. I'm keeping my risk right above it, right? So worst case scenario, once again, I'll break even. And then I'll probably walk away at that time because I'm already that's my third trade. But price then continues to break structure on its way down, right? And then I put in the Discord, I said, keep an eye on 451.20, right? Because we had this very large buyer here, defended it once, twice. So I was like, if I see any buying here, I'm going to trim my position 70%. But usually when I'm writing that's also the same area I'm looking to add to my position. And once again, like, learning to add to your position just solidifies the mentality you need here. Because, once again, losing trade here, right? $200 loss. Break even trade here, right? Now the third trade, entering all with the same position size, right? 10 contracts, 10 contracts, 10 contracts. Now, at this point, once price comes down to a low of day, we're up almost 70%, right? And so that makes all the money back plus more. And now we're looking to add to the position. So, boom, Thank God we didn't get any green candle here, because if we did, I probably would have sold. But we sold right through it, right? Hitting all these buyers' stop losses. Boom, sells through it. Comes up for the retest. Now we have end of day about $1 away. So I'm still willing to put more on my position targeting end of day. Another dollar moves, another 60, 70%. I'm like, okay. Price comes in, rejects it right here, Todd. This is what I love. That lower high in this area, right? This is my, okay, I'm adding to the position, targeting end of day. And now my stop loss for the whole trade at this point, I need it to break structure. Now, for it to break structure, let's see if I need it to at least, like, probably right there. That's probably my stop loss. And I love how this played out, because we literally ripped right into it, right? But once again, we can't get above it. And this is when I was super pumped. I was like, and volume was getting really low right here, but it was still going my way. And end of day was the target. But once again, I'm not just going to get out at the target. Like, I want to see how price reacts, because these end up selling, these could keep going. I've been in these trades, you know what I mean? I've been in these trades, and these things sell off like $8, $9. And once again, it's just the whole mentality of trading based on market conditions, right? Like I don't want to get out of my trade until structure's broke. And then let me see. So here's my little stop loss. At this point, I'm going, hey, if we could break that, then I'm out of the trade. Broke it, out of the trade. And it was lovely. And I love days like this, because this right here just solidifies the belief in my mind that it's okay to have losing trades, as long as you follow your process, you stomp out, and you approach it with the same position size every trade. So important. Like if I had went long with 10 contracts here, 10 contracts here, and then 5 contracts here, I probably would have just maybe broke even on the day.
Yeah.
So even if you're you're learning, and you're approaching it, even if it's one contract, that's completely fine. Just get in the habit of sticking to being consistent, right, with your behaviors. That's everything in the game. Like we can't control price action, right? And it's like that serenity prayer, right? God grant me the serenity to accept the things I cannot change, right? We can't control price action, but and the courage to change the things I can, right? But we can control our position, our stop out, and you know what I mean? It's just so, I love it. It's so cool. This was a great day right here. So
it was. I don't know if you seen what I put in the ES channel, but it was just the way we trade. It was beautiful.
Yeah, it was
lovely.
Absolutely.
There were multiple places you could have added. Of course, we can't see the 2 minutes right here. But,
yeah.
Those GBIs were nice for ads.
Yeah.
But that was the trade. The break and retest, lower high.
Yeah.
It was mine.
It was everything. And
that's what I look for every day.
Yeah, me too. Absolutely. And the reason why I love that strategy so much is it's literally telling you in the now moment who is in control of the market and which side of the market you want to be on. Like if you and it's so cool, because like how we do this, like, once again, we got previous day high here. Buyers defended it, and then boom, sellers break through it. Now, this level is so, it's literally the canvas. It's the blank piece of paper that is going to tell you what the market paints. It's so cool how I go into this now, because now this level is going to tell me everything I need to know about the day, right? Now, I've been using the open so much lately, and we're going to dive into it in more examples, but that open is so important because, like, once again, if price came up and buyers defended this level, I would have been looking to play longs.
Yeah, on a break and retest.
Yeah, exactly. Like if buyers were to defend this level, if price came up and we got a retest on this level, I'd have been looking to go long, targeting that 455.50, right? But it didn't. So once again, we're using the level to tell us who's in control of the market, not an indicator. We're not using a hopeful strategy. We're going, hey, what happens in this level is going to tell us everything we need to know to put on a higher probability setup with low risk. Boom. And that right there is going to keep you from blowing up your account. It's going to keep you from taking hopeful setups, right? Now you're trading off a strategy that's based completely on human behavior, right? We can expect the banks to stop out. And it's so cool because once you start trading this way, you'll always look at price action this way. Like it's so like look at this wall that low of day played. Like it was like this was such a strong critical level here, this 451.20 earlier in the day, and once it snapped through it, it literally became a block of a complete resistance. Couldn't get through it. Like buyers tried wicked hard. You know, somebody was looking at this double bottom, going, "Oh man, this is a great opportunity." That used to be me too. Like I'd be like, "Oh man, double bottom. This is a great long opportunity. Great candle out of it. Someone went long right here or right here and got cracked." So, like, I was reading this book. It's called The Best Loser Wins by Tom Hogart. I recommend it to everyone. I'll post it in the Discord. And it's all about understanding that, like, the market's not like Walmart where when things are cheap, you want to buy them, right? The market, when things are selling off, you want to continue to sell. You don't I used to always look for great reversal opportunities or buying the low, selling the high. Now I'm looking to sell the lower, and just trading with trend. You know what I mean? And I love that our strategy focuses on that because now once price, I don't know if we ever got above this 451.20 area, but that would have been my area to go long if we got above that. And I was expecting, I'm not going to lie, when we started to hold below end of day, I was extremely bearish here. I was like, oh man, this thing's going to sell off down to
previous day low.
Yeah. Cool. I was like, this thing's going to keep going.
Yeah, and it opened up too at like the open and the previous day high was like so close too. So
yeah,
really off the open, I seen it break to the downside. I said, "Uh-oh." That should change something for you.
Absolutely, and it's so crazy because the way I was looking at that. So, and we've seen that a couple times this week. When the open and previous and when two critical levels are right next to each other, like when end of day and previous day low are right next to each other, or the open and previous day high, that's going to give you a lot. Like you're letting the market paint its picture at two critical levels at once. That is really good. Like that's going to give you some really good information right there. And yeah, we closed above it, and then think of how many traders got stomped out on that long, me being one of them. And that's, and to become one with the market is to understand where people are getting stomped out and using that to go, okay, let's see what happens when we revisit this level. If those buyers aren't there, that means there's going to be a lot more sellers. So that was
in the pre-market. In the pre-market, it kind of formed kind of a head and shoulders.
Yeah.
or I don't know. It didn't. It was almost a double top, but that's
It's
kind of what I was looking at.
it's crazy because pre-market we ripped. I don't know how to pull up pre-market data on this, but when we ripped above that level and consolidated, right? It was like, this has happened to me so many times where it looks like a perfect long play, at least in my brain.
It did.
It looked perfect long play. And it's almost like this is too good to be true. It's like, because it happens to me all the time, where, buyers are kind of accepting this area, but that gap down is always, you can never neglect a gap play. Like the gaps, usually anytime we gap up, I'm looking to play that. So yeah, that was a super good example though of how to take an L and keep moving forward. Like you're not supposed to like, and I can't say it enough, but when I used to always need to be right, I was so worried to put on a losing trade, because we constantly are associating our worth with our last trade. Like no one wants to lose money. Like I get it, but the quicker you can detach yourself from the outcome of one single trade, the better you're going to trade your process. And then the longer you do that, the easier it's going to be to trade your process. And then the easier it is to trade your process, the more money you're going to be able to trade your process with, meaning more money you're going to make. Like that's like what I love about trading is if you can consistently make $100 a month, in theory, you can make $100 million a month. It's the same process. Like it's just a different, it's just a different amount of money. So we're constantly just in battle with ourself and our emotions to be able to trade it properly. So like if I'm in a position where I took a losing trade, so be it. I'm going to just on to the next, trust my process, and go from there. So all right, we'll rip right into Monday here. Monday once again gapped up. Now, previous day high was this 44094, like 441. So the way I play these gap ups is I want to see a clean break and retest off the open to the downside. So man, this trading view is killing me.
My thinkorswim ain't working either. I don't know what the hell's going on.
Yeah, they said it was going to be up around 11. I was like, all right, all good. Okay, here we go. All right, so we open. Let me zoom in a little bit. All right, so we open about, what is that? $1, like $1.50 above. Once again, right? Like I don't have pre-market data, but that open print right there at 44227 is going to tell me everything. Now, a lot of people ask me, they go, well, which part of the open candle are you looking at? And there isn't a correct one, right? So basically, when the candle closes, hold on. Okay, here we go. Let me just, jeez. Okay. Yeah, bear with me, guys. We'll get there.
I'm doing the same thing.
This thing. All right, here we go. I don't know how people trade on TradingView. Maybe it probably just takes a little bit to get better at it. Okay. All right, so this was my setup here. Now, once again, I want to target this gap down. Open candle is somewhat bullish, right? So we end up ripping, holding above it. All right, so what I'll do is I'll mark that open spot of the candle. But in reality, I got my eye on every part of it because we don't know what's going to happen, right? Price looks like this. We don't know. You know what I mean? all I know is there's a gap down. I don't know where my target is, but I think pre-market was right around like 443.14, something like that. So basically, price comes down, and we get that double top. Now, this is another reason why I love waiting for the market to play out before I make a move, because at this point, if price breaks above high of day and we get a break and retest, then I'm looking to play longs, right? I'm not looking to make moves super early. I'm not looking to make moves super late. I want to wait for the market to make intraday levels and then see how price reacts off these levels. We got that double top right there. We come down, retest this open print right here, or the close on the open candle. Get that little retest. This is when I'm like, okay, we couldn't make a higher high. So if we can't make a higher high, that's telling me conditions are somewhat bearish. Now, QQQ was also starting to like sell off a little bit at this point. So I was all right. I was like, okay, I'm willing to put on risk here, targeting end of day, which was down here at 440.15. Price comes down, and we can't really break previous day high. So this is how I trade this, though, and it's really important because this is how you're going to learn to, let me get rid of this. This is how you're going to know when to get out of your trades and whatnot. Because once again, like obviously we'll want to hit target, but you must be ready to adapt to any scenario, right? So we break below, and now we start to make this little area, this 441.36, and then price breaks below it, and then we break right back above it. This is when I'm out of the trade. This is when structures now broke to the upside. So once again, I'm using that break and retest here to tell me who's in control. This is previous day high, which I know is an area buyers are probably going to try to defend. I know Darren always says it, right? The Friday, whatever, this being Monday, Friday previous day high, if you open above it, it usually acts as a pretty good support. Now, so that was my whole methodology. Price broke right into it. And this is when I'm like, okay, if previous day high breaks, next target, end of day. And then if end of day breaks, next target is going to be the lows. But that did not happen. So I ended up getting out of the trade on this candle. And then once again, not holding on to your trade, hoping to get more, right? Getting out when the market tells you to. And if you learn to trade this way, you can then, your brain will be open to more opportunity. Because now I'm out of the trade. Price action looks like this. And I'm going, okay, which level do I need to see held for me to go long, right? What's going to tell, you know, like if you're holding on to your trade and you're like, oh, I want it to go lower, when you're short, the only candles you're looking at are red. Now, once you're out of your trade, you accept it. You're like, okay, I'm done. On to the next. I'm like, okay, now we're starting to get break and retest off this level right here. And once again, now that structure's...
You took that one, huh?
Yeah, because now that structure is changing. And this trade actually paid out very well. And once again, it just goes to show we don't have to make these like slam dunk trades every time. This trade right here was almost 70%. It was like $1.20 at in the afternoon. I think it was around 12. So the premiums, you end up buying pretty cheap in the money on these. They're like $70, and they rip all the way up to like 150. So they're like, you know, super fast. Right into high of day, which was the target. And then once I got some selling there, I sold the position. And then right there is when I stomped out of the trade for the rest because we broke structure. So it's all about looking at that structure. Like the market's going to paint her picture it's gonna be structural. But once it breaks, I'm looking to then adapt to that situation. So
yeah, I remember I sent you that short that I took, and you was like, "No, I took the long down here, the other one." I was like, "Damn, I missed that one."
yeah, and that's what's so cool though. Like it doesn't matter. Like that happens all the time, right? Like we'll text each other, right? I know it happens a lot with Darren too. Darren's like, okay, I'm entering this short, and I'm like, oh, I just got out of a long, and that's what I love. That's what I love to see though, because that means we're doing exactly what we're supposed to be doing. We're identifying, hey, like look, structure was broke right here. That's a perfect That's a perfect trade for a short play, right? You're right out of supply.
Yes.
Right.
So you got the break and retest and everything.
Yeah.
Just like the long, it played out exactly like the long did.
Yeah.
And like you said, broke that structure, and we got the retest with the wick.
Yep. And look at that. And I love how it sells off right into this, and then that turned it to an exact wall for price. Buyers just soaking up all those orders. Perfect market imbalance, right? From low to high, high to low, back and forth. And this is how I trade ranges, right? Like this is how I use that whole continuation theory of because a lot of people ask me, they're like, you're a continuation trader, right? Like, how do you trade days that are ranges? And this is exactly how I do it. And it's so important to remember, we don't have to crack $2, $3 moves every time, right? We just have to take good risk reward setups. And, even 70 cents, 80 cents is going to pay you 30, 40%. So, it's really important to remember that. Oh, I didn't even see this. And then price literally ripped all the way back up. Wow. Yeah, that was super, super trending day right here. And then literally.
It did the same thing. It broke and retest that structure.
Yep.
With wicks.
Yep. I mean, look at this one. Yeah, this is perfect. Now, I usually don't take trades this late in the day. Only because the premiums are super, they fluctuate very like that. Like the contracts right here will be about $10, and then they'll rip to about 200. Now you can make a lot of money on these trades. It's really, when you have an hour left in the day, you need it to go your way. And once again, I don't like approaching it in that state, but we got to point out here, it was literally a perfect break and retest off this level. Boom. And then came Tuesday. This is a really good day I want to talk about. So this day right here, Tuesday, right? Yeah. This day was insane. Super massive rally. Now, I want to point out something crazy here because I actually got stomped out of my first trade on Tuesday on longs. Now, check this out. So, pre-market data held a very important part here. I don't remember where. Let's see. Hold on real quick. Okay. Doesn't matter. We'll just roll through it like this. Okay, so this was Monday's last candle. So we had previous day high.
Previous day high was, man.
Yeah, it was right there. 443.38. Let me see if I can move this.
With the wick.
Yeah, it was perfect. Now, when I do it something like this, okay, that works. So I made the mistake on this trade. Well, I wouldn't even call it a mistake. So I entered long relatively at 444, right? Because if we were holding above 444, I was super bullish. Let me whip out the 1 hour real quick and just show everyone where I got my target. Oh, man. Okay, hold on. Okay. So the market looked like this. So my targets in this scenario were 448. This is tough. Hold on. This is my computer. I don't know what's going on. Okay, there we go. Boom. And then my next target. And once again, when I'm pulling targets, I'm literally pulling from previous candles, the tops. Like, I never don't complicate it anymore, and it's got to be just pull from previous areas, because in theory, the way I always look at it is there's a seller here, seller here, all the lower highs, right, are the lower lows. So in a bullish scenario, we're going to have to revisit these levels. And these are the levels I'm interested in, because if buyers can battle these sellers and win, I'm super bullish. You know what I mean? That's how I look at the market every single day. Like, I want to look at previous levels to see what happens there. And whatever happens there is going to help me make the higher probability setup. So that's basically how I find my targets for longs, right? I literally just use my previous day highs or I'm sorry, my previous candles, right? So we rip and we hold above previous day high. I enter this trade long, and I bought my contracts, let's just say, for $100, and I put my stop loss in at like 85, and it gets hit literally on this candle. I get stomped out, right? And that's just what kind of happens. Yeah, listen. So I get stomped out on this candle, but this is once again why it's so important to trade with consistent position size, because I get stomped out of this candle. My targets are way up here. I'm like, okay, I'm super bullish on the day. My first target is 445.50, which is literally $2 away. So I'm risking $2. I'm risking like 30 cents, 50 cents to make a $2.50 move. I get stomped out, and I'm like, okay, whatever. How can I get back in this trade? And I ended up going with QQQ, but SPY is very similar. So QQQ was bouncing off pre-market high perfectly. So I ended up taking QQQ long, and the market ends up rallying and doing exactly what we always look for it to do, just continuously breaking past previous levels, coming down, retesting them. Now, what's really cool is on days like this, when sellers just aren't that present, you're going to continue to find break and retest. Even though I had this critical level right here from previous, right? This was such a bullish chart pattern. I added to my trade, right, on this break and retest, continuously targeting the next areas, right? This day was phenomenal. And once again, even with that 15%, 18% loss, just taking the loss, moving forward, kept my mind in the correct state where I'm still okay to go, okay, where's my next opportunity? Because that's what it's all about. It's all about being able to take a loss and go, okay, where's my next opportunity? And I knew that was going to happen.
Yeah.
I mean, and that's the price I'm willing to pay with hard stops, right? Like, if that's going to keep me from, getting crushed on a losing trade, so be it. You could always re-enter. It's going to happen, but it's better to keep myself safe. You know what I mean? So that's literally just the price I'm willing to pay. It happens, but it's the price I'm willing to pay for the state of mind of being like, okay, no matter what, I can't get hurt. Because if you're entering the market in any fearful sort of mentality, right, where you're like, okay, you're not gonna view your edge properly or the market information. You're not gonna be able to understand it properly. Instead, you're going to be hoping that the trade goes your way. And then when it doesn't, you're going to start hoping even more. And while you're hoping, the market's doing exactly what you want it to do. You just can't see it.
For sure.
And then you literally can't see it. And then that's why at the end of the day, you'll go back and go, dude, what was I thinking? Like it did exactly what I wanted it to. But so it just, the mental stops are so worth it.
All right. Hey, Josh, try your think or swim, because it's working on my end.
Oh, is it? They must have fixed it. All right, I'm pulling it up right now. This is killing me. Yeah, here we go.
I thought it was just mine. You had said something. I said, shit, mine ain't working either.
Yeah, thanks. Let me see. I just logged in. Yep. Yeah. Yeah, here we go. Okay, I can't. This trading view is killing me. Yeah, let's give this a minute. Yeah, that was a really good day though, right there. Yeah, this is loading. Let's just give this a minute. These are the days right here that I live for, these trading days, because hold on. As these continue to trend up and trend up and trend up, it's just you're just pulling money out of it. It's just, these days will rip. Contracts will go up over 1,000% these days. You crush it. But these are the days I want to talk about, because it's very, and I made a video on it on my Instagram. I used to be the trader that was so predictive, where on days like this, I am constantly trying to find where sellers are going to come in, right? It's easier in our mind, instead of going, hey, this market's going to keep ripping. It's easier for us sometimes to go, hold on, let me switch my screens. Here we go. Think our swim's back. Thank God. Okay, here we go. Think or swim. Go live. Okay. There we go. Boom. Okay, can you guys see that? Okay. Perfect. Okay.
Still seeing trading you.
Oh, really? Hold on.
Yeah.
Okay.
Yeah, I see you now.
Oh, you got think or swim? Okay, perfect. Okay. All right, here we go. So once I was getting stomped out on SPY, check out this break and retest off of pre-market high right here. This was, dude, oh, look at this. This was perfect. This was a perfect break, perfect retest in this level, and then boom, this thing just started ripping. So once again, like I said, this is the price I'm willing to pay to avoid being vulnerable in the market. Was I happy I got stomped out of this trade? Absolutely not. Honestly, you know what's crazy though? I got stomped out because my entry was not perfect. If my entry was a little bit better, I'd have been, well, nah, I'm not even going to say that, because this was, so here's pre-market high on this, price rallies, right? I go long on this candle when it starts ripping up. So I go long at 444. My stop loss literally 443.50, right? So I don't like risking more than 30-50 cents. It comes down 50 cents. I was watching it too. The last penny, that 51, bing,
Right.
stopped out of the trade. And then I'm like, oh, right? And I just knew it. I knew it because once price starts ripping back up, I'm like, oh man, this thing's gonna soar. And then I was watching QQQ, and it's crazy because QQQ ended up giving me almost a 500% return. Right? I'm gonna show you. So this thing started to rip once again, the same exact position size as before. 10 contracts here, stomped out, lost $200. 10 contracts here, rips, make 400% on it. So, I ended up making way more money. But what's important here is to understand that your ability to use the same position size is going to save you. Now, I had supply all the way up here. Now let's just do what we do for targets. Literally grab previous days. I'm going to look exactly here. Let's do 20-day, 15-minute. Oh, yeah, that was it. So this day when we had all this massive sell-off here on 8/24/2023, massive sell-off, right? I'm just literally grabbing critical levels from this day, right? Here's the open. Here's some congestion. So those are my targets. And then price literally breaks and retests above. And I like seeing this the day before, right? Us holding previous day high from the day before. This was very, this is a bullish chart pattern here, break and retest to the upside. Once again, I'm using larger time frames, looking at them as if they're 5-minute charts, right? Like we're making a higher high or a lower high. I'm sorry. Let's hold pre-market high. First targeting 370, second target 372.64. We literally have $5-6 to the upside. That's potential to make a load of money, right? So that's, that was perfect. And look, price literally rallied right into our level here. Once again, I'm not getting out of the trade until structure breaks. Actually, I do think I got out of this trade up here at 372, but I ended up re-entering because when you're approaching a supply zone, I mean, look at this. This was perfect. Rip, consolidate, go long right here.
Yeah.
Bam.
That end of day break and retest 10 minutes after open was there.
Oh yeah, that was end of day too, wasn't it?
Yeah,
Oh man. Oh man. Once again, 2 critical levels being defended. Oh, it was. Look at that.
Yeah.
End of day right here. The most volatile price of the day, right? End of day. Look at all this volume. See all this volume that goes into the closing bell? Think about it. With every buyer, there must be a seller. With every seller, there must be a buyer, right? It's an agreement on price in the now moment. So this is why end of day is so critical. All this volume goes into that last price at the end of the day. So whatever that price is going to take a lot of either buyers or sellers to defend it. So how that works, price literally comes down. We get a bullish break and retest. Remember, chart patterns, nothing other than human behavior. Bullish break and retest, right? More buyers than sellers. Rip. Comes into previous day high. Or I'm sorry, pre-market high. Boom. Rip. I was getting stomped out on SPY on this candle, and I literally entered on this candle. Once again, willing to put on risk to see what happens. Market rips, rallies. This is literally a $4.50 move. 478% on this trade to the upside. And it happened in less than 20 minutes. Boom. Now, it was insane. And so let's talk about it, right? Structures holding. Now, in this case, you wanted to make you wanted to continue to defend your supports, right? So this would be a resistance turn support. In reality, you at this point you kind of gotta wait. But once this made its like double top rejection, I took profits. Really shouldn't have. But once again, I was like, what else do I need to see to get back in this trade? Right? Because once again, we're letting price action tell us everything. Now, I knew my targets were much higher. We got 37398, right? So we got 374 is our next upside target, which is still $1.30 away. Towards the end of the day, that's another 150%. What do I need to see to take it long? We get a perfect break and retest here. Once again, in the trade, targeting 374, rip into it, get a double bottom or double top. And that's where this is where I exited my second trade when I came back for some more. So, what's really important about these days, and it continued to go, but what's really important about these days is to remain bullish until otherwise. Because I used to try to take these short, assuming a VWAP retest, assuming XYZ, right? When you assume, you get crushed, right? Like, what's happening right now? How can I trade right now in a probabilistic manner, right? Like what do I need to see to stay bullish? I will stay bullish until structure's broke, and that structure never broke. So it was a perfect day here. I love these days. These are the
yes, indeed.
Yeah, these days are literally, these are our bread and butter as break and retest traders, as continuation pattern traders, right? You want to trade with the banks. These days you are going to make all your, like, not all your money, but these are the days you want to get good at. They're very uncomfortable. Like, because I used to trade reversals every single day. And what happens with that is your brain's programmed to constantly wait for the reversal to put on a trade. And so it took me a little bit of time to go, I don't want to see a reversal. How can I keep my mind in a continuation state of mind where I'm constantly looking to go longer? Once again, this isn't toilet paper. We don't want to, when price is getting cheaper, we don't want to buy. We want to sell the lower prices. We want to buy as price gets higher and higher. I know that sounds contradicting, but we're not in control of price action. So we must trade with the people who are in control of it. And there's no saying that this won't rip, $10, $13, $14. So, and it's just that whole philosophy of being reactive versus predictive. Every time I try to assume something's going to happen, I get crushed. So my goal is to go, okay, who's defending this critical level and how can I trade with them? Who's defending this level? How can I find a trade with proper risk management to buy into this hand, right? So that's the philosophy I'm approaching every day with. So
yeah, trend is your friend, what they say.
Yes, absolutely. And I used to, we all hear that, we read that, and it's like, how do I do that? Well, that's how you do it, is go, okay, what do I need to see to trade with? Now, what was really cool is we closed above 374.22. Now, just like a 5-minute chart, imagine these are 5 minutes. If this is a 5-minute chart and you have previous price action up here at 385 and you're holding above a previous resistance, that's very bullish. How can I go into the day tomorrow in a bullish fashion? We must hold above 374, but if 374 right here breaks, then I'm looking to play short to the downside. But if 374 does not break, I want to start looking at that 380 level. How can we get to 380? That's how my brain works when looking at like pre-market plans, right? And once again, not trying to be predictive, but what can I extract from the information in front of me to make a higher probable setup, right? Like, what are market conditions at this point? We're holding above resistance, so those are bullish. We got a perfect retest in this level the next day. double bottom in it, which was super, this was perfect way to understand who was in control. So that was it. I ended up and now there's a couple different ways to trade this, because these days are kind of tricky. So I went long here once we held this area in this was actually a pretty cool trade, because this trade right here is going to show us how you don't need
Wednesday, Josh?
Yeah, this is 8:30, which was Wednesday. So once again, I'm in a more bullish state of mind as long as we're holding 374.22. Price comes down, hits it, we get buying, right? Now, I don't want to just take the market long, even though that would have been a great place to go long. Because remember, what you're doing here is you're just playing break and retest on a larger time frame. Look at this. Perfect. This was resistance. We closed above it, coming down, retesting it. So learn to trade the 1 hour like it's a 5 minute, and you will make money. You will constantly be trading with conditions properly. Perfect break and retest off this level. Now, I traded it a little differently. I wish I traded it that way, but trading it this way is still not, this is still completely fine. The way I traded it was I identified this level. Sellers were here, right, off this little pre-market level. Now, if we could rip into this, I'll be looking for longs. Now, using that open candle, like I always talk about, that's the open closing price. We rip, retest it very briefly, and I go long. I like seeing this candle holding above the open. I like the slight retest. I take this trade long, and we rip up. And once again, it's break of structure. I'm in the trade until we break structure. We break structure on this candle, I'm out. So literally, this is about $1 move. Not the prettiest and sexiest trade, but these trades right here are going to add up. But they do take swift movement, right? Like, you need to be very quick on these trades, and you need to trust your analysis very quickly. It's one of those things where the market's it's holding above the open. I'm in a bullish state of mind because we held that resistance previously, and buyers showed up there. Market rips, quick scalp, right? And then price comes down, rips through this level, breaks below this 374 level. I almost went short here, but I didn't because previous low was so close. And I don't go short until we come up, retest, and sell off. And this is why, I've had traders ask me, right? Do you always wait for the retest? This, that. Every time I don't wait for the retest, I usually get taxed. I pay for it. I know I watch some traders on Instagram. Some of them, they just hop right in. Kudos for them, right? Maybe they're good at it. But I highly suggest you wait for something to break and you get that retest. It's literally like a 95% chance it's gonna give you a retest if the trade is doing exactly what you're thinking it's going to do. If it doesn't retest, look, it's probably because for a reason. And look at how it didn't retest here, and buyers took over. Now, what's really cool here is you could have used that open print once again for a perfect long position right there to the upside. That was my second trade. I went long here on this candle, break, retest off the open, Price started to rally, almost got stomped out, started to rip, and then once this structure was broke, I am out of the trade. Unfortunately, this is just how price action works sometimes. Can't control it. But price ripped. Right here, I'm up probably 50%. Boom, sells through it. Now I'm only making like 20%. That's part of the game. That's just how I trade. It's all good. There's, I don't like, I like securing my bag with the structure. I want to trade with the structure of the market. Like, this is going to happen. It's going to sell through it. And it is what it is. It's how, it's part of the game. And then, and then price literally rips and continues to hold structure all the way up. Boom. Little challenging, right? And then look at this. What's up, Todd?
I said that was kind of a tricky day.
Yeah.
I mean, I caught that long off the open, and then I didn't take that short either. It happened so fast and didn't get a retest. I was pretty much one and done that day.
You could agree with that though, right, Todd? Where the days you don't wait, any trade you don't wait for the retest, usually you'll have to pay for.
Oh yeah, like it happens in real time. It happens so quick.
Yeah.
You feel like you're chasing then, And then if you're chasing, and you don't have a good risk reward, and then that's what I've been focusing on a lot here lately is if it's not a small risk to a big reward, I'm not taking it.
Yeah.
And I like to put my stops above damn near the bar I enter on.
Yeah.
So I gotta be dead nut,
Yeah.
I mean, when it happens that quick, it's hard to get a good risk reward set up.
I like how you said that though. You're like, if it feels like I'm chasing it, it's not right. I 100% agree. And you know what? Sometimes we may miss out on some trades, but it's better to not tolerate it, because tolerating that behavior is going to cost you money. It just is what it is.
Yeah.
You know what I mean? Like anytime I go for that, without the proper retest, I end up paying for it. And usually it's because until you get the proper retest, the conditions ain't proper. It just is like this is a perfect example right here. Next day, QQQ. Let me see here what my target was. So next day here, my target, and we're starting to approach where we're pulling targets from a while ago, which is good. That means the market's trying to do its thing. Okay, so I had a target right here from the open candle on this massive sell-off. Oh, hold on. Once again, targets come from previous days. That's it. I want to see what happens in this level, right? And this is why I'll get rid of pre-market data, because look how clean you can see this here. Look at that. We got this right here. Now, I had my eye on this gap up, right? Because there's this gap here from 380 to 383, and I'm in a bullish world, buyers will defend this, and then we'll close this gap. So in a bullish scenario, that's kind of what I'm aiming at. That's what I'm looking for. Now, what do I need to see that, right? So this is what the day looks like on QQQ. We rally right into pre-market high. Previous day high was right here. Man, it worked perfect. Now one thing
SPY was ugly.
SPY did it too?
Oh, it was ugly on SPY on maybe a larger time frame.
Well, and it's crazy you say that, because I was trading I traded QQQ a little more than SPY this week, and
Yeah.
Yeah, you're right. It was very ugly. QQQ will give you, and I had someone ask me like which one's better, right? And it's not that one's better. It's which one can you see more opportunity on, right? Like that's how I go into every day. I go, okay, SPY setup is X, QQQ is setup is Y. Now, which one is going to give me a better risk reward? And that's it, right? So, yeah, SPY was super ugly this day. It just there's a couple different ways. Oh yeah, this was it right here, which is one of the main reasons. Okay, so we had previous day high, and then we had that pre-market high level. I ended up trading QQQ. Now, this was pre-market level on QQQ. So, price is holding previous day high. We keep getting rejections. Now, at this point, you just have to go, okay, how much am I willing to throw on the table here? And this is like when you get pocket fives, or maybe I would say pocket, jacks in poker, and it's not the most slam dunk setup, but you also know it does pay. So it's like, okay, I'm willing to throw some money on the table here, and I'm going to do that because my risk is extremely small. My risk is right below previous day high, just is what it is. Throw money on the table, and then you got that nice break and retest off of pre-market high. And then you get this little break and retest right here as well. But the market was very choppy. But if you're you got your eye on the structure, it's going to help you trade with the overall trend of the market. Yeah, SPY was super ugly here.
Yeah, it was.
Perfect double top here. The trades though I have been trying to take on those double tops is like, oh yeah, this day was horrible. It was just super choppy.
Yeah, it was. It
was challenging.
I think I took one trade. I got kicked out, and then I tried another trade, break even. I was like, I shit on this.
Yep.
And
that's it. Like that's fine. I ended up taking this short right here. Once again, that open candle is going to tell you so much. Buyers just kept, defending it. And this is another reason why it's important to wait for that retest, because when you close below it, like a candle right here, if you just enter, you're going to get cracked. So, when you're getting that battle, let it play out. Be patient, let it play out. Then we got a nice little retest here. I took the market short here. I thought it was going to be a super slam dunk trade, which it definitely was. This was definitely a good trade. And I kept my stop loss right here. Ended up getting kicked out. Did I give money back? Absolutely. But once again, trading in this style is going to help you catch so much longer moves to the downside. I was targeting that 449.15. Perfect break. Go for it. Yeah, right here, I literally gave back 50 cents, or I'm sorry, 6 cents, which is definitely a lot of money. But that whole mentality and style of trading is the way you want to trade. It's just going to help you grab way more. And QQQ literally ripped right into the open. And that's why, once again, I'll watch both, because if SPY is selling off and I'm in a short position, and QQQ is more bullish and it's way above the open, right? QQQ looks like this. That's another reason why I took SPY short, because QQQ, this level right here, which is I actually added to my setup right here. It was this level was decimated, came up, rejected. Now look at SPY once again using this level, this open level. Couldn't get past it. Boom, sells off, break structure. And the way I look at this is like, yeah, there's a perfect break and retest here. But how can I identify this quicker and hop in a trade faster, right? So that open print does a lot for me. But now SPY selling off, and right when QQQ hits that open, look at the buying pressure we get on both, right? So I highly suggest everybody watches both. It's gonna help, definitely gonna help you.
I got the same thing up on my screen. I got SPY and QQQ, and then I got the NQ and ES on my other screen. So
yeah,
I kind of do the same thing.
Yeah, constantly watching both. And then Friday, price rallied, open right above it. I'm like, okay, I'm super bullish. I traded SPY. Super bullish. Once again, though, the consistent trader isn't right every trade. Like that is a false reality. Like people, and I used to do it. I would obsess over analysis. I would try so hard. Every time I made a losing trade, I would be deep in my journal. Where did I go wrong? How could I be better? Oh, I should have seen this. Oh, I should have seen that. That mentality is going to drive you insane. Trading has so many variables, it has so many circumstances. You cannot control or identify all of them. Don't even try. This game is all about the long term. And to become a long-term consistent trader, all what you have to do is control your risk reward and control your position size. And that's literally all you can control as a trader. You can't control if this trade's going to go your way. All you can do is go, hey, this is a good setup. I'm going for it. I seen it. I was like, okay, we're closing above previous day high, neglecting the gap up. I was like, okay, I'm willing to go long here. See that 2 minute kind of, here's me trying to justify why I took it. But that 2 minute looked all right. We closed above it, ripped right into pre-market high. At this point, I'm like, okay, we're made a perfect double top, and as you grow as a trader, you might be able to stomp out much quicker here because you'd be like, okay, perfect double top. This isn't going my way. I'm out. Boom. I had my mental stop in, or I'm sorry, my hard stop. Sells right through it. Boom, out of the trade. Took a 20% loss on that trade. Now, didn't wait for any retest, right? And I literally wrote in the Discord. This is what's crazy. I wrote, I'm looking for shorts if we could revisit 452. I think I put 452.91 using the open candle, which was also a previous day high. Now, didn't get a retest. Instead, we get this candle. I make I have FOMO. I don't want to miss out on this move to end of day. I'm like, okay, I'm hopping in short here. Price starts to go my way, completely reverses, stomp out at a break even, right? I'm like, okay, how can I reassess this situation and trade my edge, right? And I'm like, okay, I'm going to use that previous day high level. Once again, sellers defended it. Let's see if they can defend it again. And I'm going to use that open candle. And what had me very bearish this day is on the daily time frame, we were rejecting this gap. Like I kept looking for this gap fill all week, and we were rejecting it. So this is a double top, or this is a supply rejection, we call it. This is supply, So that was where my whole, if we can defend previous day high here, I'm looking for a short play. And what do I need to see it? So took a loss my first two trades. Now we come right into this open print level, and we start to get rejection on the 2 minute. break structure on this candle, right? This is like our first candle we start to break structure on. Price comes up, rejects. I go short on this candle. Now, it's probably not the best candle to go short on. I actually think I went short a little earlier. I may have jumped the gun on this. But once again, my risk is super tight. My risk is no more than this candle right here. And that's the game changer. And then price sells off, and now we're starting to form our own bearish structure to the downside. Right? We get this perfect rejection here off this level. That probably would have been the best entry, if you ask me. I mean, the most structured entry, because we got end of day all the way down here. And once again, that whole, I take that back. It's not about having the best entry. It's about having the entry that's going to have the best risk reward. That's the best entry to me. Like in the entry where you've identified that structure's been broken and these bullish conditions are now bearish. Try to look at it that way. And then price starts to sell off. I'm first targeting this 451.31. And then we sell right through it, which was beautiful. I was I was really excited to see this trade work out so well at this point. And then price comes up for the retest. This is where we add to the position. Our stop is going to be right here, because if we can get above these wicks, structure's broken. And we couldn't. Price rallied all the way to end of day. We get another break and retest off of it. But then price reverses off of. We had a demand zone, right? Let me whip out pre-market data. It was like off this open candle. So, and I was honestly I was thinking this was gonna sell off at least down to here. It didn't, and that's completely fine, right? So just identifying, adapting, and I can't say it enough, but your ability to trade with proper position size is gonna save you every time. Whether it's 1 contract, 2 contract, 5 contract, 100 contracts, just make sure you're addressing every trade with the same amount.
Definitely.
But yeah, that was.
And what gives you conviction in these trades and these setups, like we talked about before, and Josh, you made me realize this is journaling your trades.
Yeah.
Like
game changer.
Man, it's just game changer. You sit there and look at. I'll sit on my toilet even. I'm sitting there and I'm flipping through it. Just training my brain to see certain things.
Yeah.
That you need to see.
Well, and I always say this, right? You must believe in your setup and strategy. If you don't believe in it, you're not going to trade it properly. Like you need to believe in your mind. Not so and so says it and he does well. No. You need to believe in it. The quicker you can believe in it, the easier it's going to be to implement it in live time. And logging your trades is so important because it instills the belief that it works. Because it proves to you.
Yep.
It proves to you that it works. Like if every day, even on your losers, especially on your losers, right? No one wants to log their trade after they've blown up their account. But that's the most important day to log. 100%.
Yeah.
And even if it's not a blown up account, right? Even if you just, take, $100 loss, 150. Listen, this is a part of trading. But I lost money for like 4.5 years because I didn't log my trades. If I started logging, I would have found out so much quicker. Like, you don't have to lose for 3, 4, 5 years. You don't. Like your ability to become consistent is literally all up to you logging your trade, because everyone's different. What I lack with, you might be good at. what you're good at, I might lack with. Like your ability to figure out within yourself where you're struggling is going to make you become super consistent trader, right? Like, and it's hard, right? Like some things are very broad. It's like, oh, I'm impatient. Well, why are you impatient? It's because you're not trusting your strategy. If you trusted your strategy, you would patiently wait for it, right? Like even me, I went short right here. I wasn't trusting my strategy. I didn't, for whatever reason, maybe I thought I was special. Maybe I thought the rules didn't apply to me, right? But I didn't want to take this short. I was like, I did want to take this short, and then I paid for it. And that's a part of the game. I ended up going, hey, here's the A+ setup. The important thing is I didn't blow all my capital on this trade. I didn't blow all my capital on this trade. I entered every trade with the same position size, right? Because we're approaching this in a probabilistic manner, right? Of thinking in probabilities. We're accepting the risk, right? If this doesn't go my way, that's fine. I stop out. If it does go my way, where's my target, right? That's all we can control. We can't control price action. All we can control is our behavior. And if you don't log your trades, you're never going to figure out what you need to change. It's like measurement is so important. But like
the open book test. I mean,
right.
You want an open book test or you want a pop quiz? You're
100% right. That book I'm reading called the Best Loser Wins by Tom Hogarth. He literally every 30 minutes before the bell, he goes through his losing trades. Now, when he goes through his trades, he visualizes, and I've been doing this, right? Because our brains are they're a very complex tool if you can figure out how to use them properly. Like, I'll visualize myself stomping out of a trade. Like, I'll relive that, and I'll accept the loss. I'll accept the defeat, and I'll program my mind to be more receptive to when that happens to get out. And now I'm to the point where I'm out of a trade, on to the next. And what that does is help my brain find way better opportunities. So another thing I'll visualize before the bell is I'm in a winning trade. I'm up 100%. I'm up $1,000. And instead of just taking that profit, I literally visualize myself giving back $200, but then adding to my position, right? Because once again, the sooner we can learn to add to winning trades, the sooner we can change our mentality to just soak as much as we can out of these moves, right? You don't want to be the trader that captures a 30% move here because the greed of not wanting to give back that $300. I was that trader for so long. That trader you're not going to reach new heights that way. To be consistently profitable, you must make more than you lose. So on your winning trades, you need to develop the mentality to go, okay, what do I need to see to tell me buyers have to, like, say you're in a winning trade right here, and you have this little demand zone, right? This is demand because buyers stepped up here previously, right, with strength. So price comes into it. What do I need to see here to add to my position, right? And when you start looking at it like that, you'll stay in your trades much longer, and you'll soak the money right out of this market. And then you go, okay, we broke through this. Where do I need to see to add to my next position? And then structure breaks, and you're out. And this way, on days like this, you can make 400% or 500%. And those days, these days pay all the bills. So, yeah. So, once again, it's all mentality. Another really good week down on the market. Super good. I hope everybody's doing really good and logging their trades. I can't say it enough. You logging your trades, right? It takes 30 minutes. Do it. It's a game changer. It is the difference between a successful trader and not. I traded for so long, didn't log my setups. I would take a winning trade, close my computer, walk away. I would take a losing trade, close my computer, walk away. and I would repeat. That's literally the definition of insanity, because you continuously repeat neurotic behavior. So, all right, guys, that pretty much wraps it up. Thank you, everybody, for coming. This was a really good webinar. It went a little long, but that's okay. I'm going to repost this in the Discord for anybody that missed it. And I hope everybody has a really good weekend. It's Labor Day Monday, so, be careful. There's no trading Monday, so.
Yeah, future till noon, I believe that's it.
Oh, really? Okay. So, yeah, we'll get through it. I know it sucks, but. All right, guys, have a really good weekend. I'll see you guys Monday and Tuesday.
All right, thanks.
Yep.
All right, thank you.